Hi, Karen Rands here. I am talking today about Reg A Plus because it was the first of the new features in the Jobs Act for direct public offering that allowed unaccredited investors to participate. And it's also still really hardly known out there. And it was interesting when it first, the rules, the SEC took lots of comments from all kinds of folks in the business community, the financial community, the entrepreneur community, the legal community, all that kind of stuff. And I'll talk about the key differentiators of it. But the Reg A itself had been around for a while, and they what they did was they split it out, and Reg A Plus became the one that you did not have to file blue sky laws. You could raise up to, just recently increased to 75 million, started out at 50 million. You have to file the real requirement, because you need to go through a transfer agent, but you do not need to go through a broker. You must file SEC auditable financials. That means the kind of financials that a public company requires, but you don't have to complete all the paperwork of a public company. So for many, it's a lot less expensive process of going public, but you don't have to go public. You can proceed on within, I think, 6 months, and then submit for NASDAQ and New York Stock Exchange to be a public company. So um, it has those pluses on there, but it's really ideal for, and just while you're listening, I'm going to explain the who it's good for, sort of some of the nuances, some of the good, bad, and the ugly of it, and really on the ugly, because just recently the SEC has clamped down on 8 companies charging their CEO and CFO with fraud. That's a big deal. That's like prison and bankruptcy and all kinds of stuff. So, and it's because in some ways, a lot of people out there, a lot of vendors out there, a lot of service providers, a lot of unlicensed financial advisor kind of people. It's like the wild wild west, and they just kind of think anything can go. And because it's a direct public offering, I can just say things like truth in advertising, right? But that's not the case. You can't just say stuff. It's the same rules apply to a company that's doing a regular old Reg D offering. You cannot say you have a patent and raise money saying you have a patent, for example, when all you have is a patent pending. Okay, that would be considered fraud. It's an untrue statement that somebody made a financial decision on to purchase equity in your company, and it was not true. Transparency and truthfulness are the cornerstones of any private regulatory offering, even if it is a direct public offering. And because the thing about the SEC is that they say is that you filed your paperwork. They don't vouch for the companies that are going through Reg A Plus. That decision is still up to you, the investor, on it, and where you might see it, and to do your own due diligence. And you hopefully it's with an organization that's going to provide, transparency to that. One of the areas we saw this as a great opportunity for those companies that had raised an angel round. They raised their first round of financing for whatever reason. Sometimes they didn't anticipate how much they needed. They needed to go out and raise capital again before they reached their next milestone. Maybe they thought they had raised all the capital they needed and they weren't going to need to raise venture capital money. And so then they had been in business too long for venture capital, or they're the wrong sector or consumer product or something that doesn't have, that's a franchising model or something like that, that's not a venture capital kind of a deal, and they're too small for private equity funds. And where do they go? Reg A Plus is really perfect for that. If you have a story that can be told to a target audience that says, this is what we've done. This is what we can do if we get money. Will you take that ride with us? This is what we've done. This is how we've done well with managing our money. This is how we've gotten our customers. This is all the good stuff and maybe some of the bad of what it is we've accomplished so far. We raised capital, we've got a cap table, all that stuff. We maintained all of our financial records properly, all of our securities records properly. If you raise capital, you've got your investor questionnaires, you've got your folder. If you don't know what that is, I might be able to help you with that. I can tell you what you've done wrong, but I would need to get you in with somebody that legally and has the authority, the license to fix that stuff. I know what the stuff is that people do wrong and can tell them what they do wrong and what they've done wrong and why they haven't raised capital and all that kind of stuff. But sometimes they need other help. And I bring those people in. I don't just leave you in the woods. But regardless, that there's a certain protocol that you have to do when you're raising capital and a certain records. When you go through a broker dealer, they do all that stuff for you, but they're also really, really expensive. So a lot of times people will do their own capital raise. When you go into something where the SEC is looking at your stuff, you got to have your ducks in a row. And if you come to me to be a client and I'm going to manage your Reg A plus, I'm going to be the quarterback of all of that, or some combination of intrastate and Reg CF and Reg A plus, then I'm going to require you to have all of that. I'm a tough cookie that way, so I've been told. So, but because I believe that an investor that's never going to have an opportunity probably to meet you face to face needs to be able to look at your investor portal, and yes, you should have one. Particularly if you're doing Reg A plus, your own, they're going to look at that and they're going to say they want to see, like you're a public company, they want to see industry reports, they want to see competitive analysis, they want to see what your resource plan is. How are you going to scale? They want to know that when they give you the money, that you know what you're going to do with it, and that you're going to be able to get to this next higher level of going from a $5 million company to a $50 million company. What is your blueprint to do that? And is the money that you're raising right now going to get you there? They want to know that before they're going to give you a dime. All right. And so part of the problem is that people take shortcuts. Entrepreneurs and service providers take shortcuts. And they think that when you're doing these crowdfunding kinds of things, that all you need is the sizzle without the meat. You can have a video that says all kinds of great things and it makes it really exciting and all that kind of stuff, right? Entrepreneurs that have been pitching from stages for things like Venture Atlanta and Spark, the Stonk stuff, all these things that they do, they say all kinds of stuff in those pitches. They talk about, their whole goal is to talk about the huge and wonderful opportunity and get you excited and go, oh, I see the potential. I want to be in that deal. And then they give you your private placement Miranda, and that's supposed to be the giant wet blanket on your enthusiasm for you to say, oh, wow, that's a risk in this. I didn't know that. I thought they had that relationship with Microsoft. They just are starting the conversations. They're talking to the third level manager down. They're not talking to the VP or the person that actually signs the contract. So I can't count that Microsoft contract as something that means that they're going to have the business that they say they're going to have in that financial forecast, right? An offering memorandum is supposed to say that. That's one of the things that the SEC kept very, very close. And they said, if you're an accredited investor, then you should be smart enough to know when this stuff is going to work or not work. And therefore, if you lose your money, then whatever. But then when they opened it up to non-accrediteds, the SEC feels responsibility to make sure that they keep things safe for them and safe investments. That's why they have gone after the broker dealers when during Dobbs with all of the different things when of raising capital and fining them if they put too many of their investors into private placements. That's why Reg CF have to go through a portal that is licensed by the SEC and managed and governed by FINRA to make sure that that organization is operating like a broker dealer in managing the investments and making sure there's no fraud in there, because they're on the hook for that. But when you go through if you go through a Reg A Plus, it's just a Reg A Plus, and you don't go through one of the portals or one of the that works with transfer agents. We work with Corconics. That's the one that we like. We actually have two that we work with, that provides a platform that lets the investors get access to all of the information that you need. It's and the entrepreneurs to put that out there, to do their quarterly reports that they have to do with the investors, to have the transfer. I have a transfer agent that is a excellent transfer agent that I work with, and he provides all of the paperwork that you have to send out to your investors on a quarterly thing at a really reasonable price, right? And so, when you're doing this stuff, so there's organizations out there that are legit, and the Reg A Plus should be the saving grace for so many companies that are sort of stuck. And for all those, if you're an angel investor in an angel investor group that has this portfolio of companies, and you got those companies that are sitting in the middle, that I'll take a phrase from a Hall Martin out of Texas, with the Central Texas part of, it had been, means 10 network now, it had been CTAN. He calls it payroll exits. So if you're one of these entrepreneurs, or if you're one of these investors sitting with those in an angel investor group, and you got those companies that said they were going to do XYZ and scale, and then as it turns out, they didn't get the funding, and now they're growing organically, and they need money to be able to go to bring that new product out, to maybe acquire this other company that's got a strategic product that will grow them, or a customer base that they need, or they want to expand into new markets, they want to expand globally, they want to bring manufacturing offshore to inshore, they want whatever it is that they're doing as a growth strategy, and they need to raise more money than a bank will give them, right? They're 5 million in revenue, they got $200,000 or $300,000 in EBITDA, and they need to raise $5 million. The bank is not going to give that to them. Private equity fund is not going to give that to them. Venture capital is not going to give that to them. And the angels that they've already invested is not going to give that to them. Where do they go? Reg A Plus is a great solution for that. Investors out there, you can breathe new life into your companies by maybe helping them do a bridge loan to do the Reg A Plus. You can convert if you want or something. There's ways to do that. It costs money. You got to get legal, accounting, marketing. You got to create really strong media. You've got to manage the hundreds of investors that are going to be making queries on that. You need to create a secure portal, your own portal where you house your confidential documents. We do all of that stuff for our customers with our partners when they want to do a Reg A Plus, and for the investors that we work with that have these companies that are kind of stuck in idle mode. They're just kind of growing organically, going down the road. And Hall calls it a payroll exit, because those founders will come back to the board and say, hey, we need to get a pay raise. And the investors are sitting there going, you're getting more money, you're turning into a nice lifestyle business, but we're never going to see the light of day. And my IRR is ticking down, tick, 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 every day. And it is not getting, I'm not going to reach the IRR that I was expecting on this, or the ROI on this. And I don't even know when this company is going to sell, and if they're going to sell at any kind of multiple. Where the solution to that is Reg A Plus. I'm just telling you, that's the solution to it. All right. Let me tell you a little bit more about this, the good, the bad, and the ugly, right? So not for startups. When they first launched, I'm up in this meeting in New York, there's all these people, and these people are so excited about putting startups on a Reg A Plus. Man, if an investor out there that might be thinking about a Reg A Plus investment, do not ever invest in a startup that has no track record and is thinking they're going to raise $50 million. That is a recipe for failure, because they will never raise that kind of money, because it would be hard for them to get their first $1 million. It's just the nature of the game of raising capital. You know, you raise it on what you can do with it and what the value is of your company. The whole idea of this is that Reg A Plus is very liquid. So there's not a lockup unless they do it. So the people can go and they can go on the secondary exchanges and sell their stock. And the same thing with if you have been one of those companies and you have angel investors and you got these folks and they've been sitting in your company as equity shareholders for 5, 6, 7, 8, 9, 10 years. Well, guess what? They can sell their offering on the secondary exchange at the strike price of whatever you're doing your Reg A Plus on. So you as the company receives the Reg A Plus money, and other people, they can sell theirs and they get their own, or they can sell it at a discount if they want, right? If they don't want to stay in for the ride. But that's just, so that's one of the real nice features of a Reg A Plus for your existing shareholders. Going on to become an IPO is much more cost effective, and it's 10 times better than doing a flip. Some of these companies want to do a reverse merger, pink sheets, all this kind of stuff. No, no, no. Because here's the thing. Part of how public stocks sell is if they have momentum. People know who they are. They've got the market makers want to buy them. People want to buy them because they've got a market presence, and they've got financials that warrant this big market valuation that they got as a public company. But if they didn't get that as a public company because they did a reverse, then you have to create the story and push them up the hill to get to where you can get momentum of other random people buying it. And there is such a thing as private equity funds, private investment into private equity funds that will invest in those, but only if it's got movement. If you got like a flat thing because you did a reverse, it's just sort of flat. It doesn't have any movement. But the nice thing about a Reg A Plus, in order to raise the money, this is why it costs money. You have to grow, and now it's perfect for consumer products companies because you have to grow a national presence, a brand recognition, and then people know of it. They know, they trust you because there's a certain thing that you do with your videos and where you place your advertisements, and you get interviews scheduled so that you as a CEO becomes trustworthy. People feel like they know you, like they would with a public company, and they can look at your financials and they can see what you've done. They can see your chart of where you're going to go. And so while you're doing that, while you're growing your revenue because you're growing your marketing, you're growing the attractiveness to investors, and you're growing. The third benefit is that now you're on the radar of an acquirer that would never have heard of you with this just little $5 million company that's puttering along there. But when you launch a Reg A Plus campaign and you do it right, you're going to have people knocking on your door to buy your company. You get your money in, you implement your stuff, and you start to maintain those relationships with the acquirers, and you set the stage. Hello, angel investors out there with these companies in your portfolio. You set the stage for an exit with a Reg A Plus, either to go on in and be an IPO and everybody gets to exit, or you go on and you get acquired. It's the perfect for that. But it's not an easy. It's not a scratch and win. It's not like Reg CF. It's not it takes a plan and an effort and a team to put it together. Okay. So, and that people can't short your stock on it like they do with pink sheet companies and OTCBB. People will short your stock on that. All that kind of stuff that happens that kills a company. I'm involved in a company that's one of the most exciting innovations around, but they made the mistake of listening to somebody and do a reverse. And then that company that did the reverse for gazillions of shares went through a back door and dumped the stock, and the stock went from being $12 a share to $2 a share within 90 days. And we were all like, yeah, this is going to go great. They're going to go big. And then all of us are sitting on this public stock at $2 a share. They can't do anything. They can't really get money for anything. They're just growing organically, hoping that somebody will like shine a light on them someday. It's the most painful and sad thing for this particular innovative company. But that's a whole nother story. They have been able to do Reg A Plus. Now they had enough money to go back private and then do a Reg A Plus and had the money to do a Reg A Plus. It would have been a whole completely different story. But anyway, so I got this article from Oscar over at Corconics today talking about end of September, the SEC announced charges against 8 CEOs and 8 CFOs for fraudulently promoting Regulation A plus security offerings. The companies named by the SEC, this is just some of them, was Elegance Brand, which is now Sway Energy Corp. I think somebody must have snatched them up. Emerald Health Pharmaceuticals, High Times Holding Company, and Cloud Structure Inc. Flouting the rules, trying to take shortcuts, it eventually, maybe you get away with it for a little while, but not forever. And it's bad news for everybody around. And with Reg A Plus gaining momentum, the SEC is putting new scrutiny on it to keep it clean, because you can't have these companies that do this stuff. And then when they go and finish their filings to go public, have all, fraud and have things where they misrepresented their stuff, or they cut corners, or they didn't do they just didn't do stuff right. It's not enough for broker dealers to record, simply do the KYC ID verification. They have to ask the hard questions. If you're an investor relations firm like what we offer up for companies, you're creating, delivering, branding, messaging, and content through stories, videos, blogs, webinars, all that kind of stuff. You have to be really, really careful to not overstate. You can't simply do whatever they tell you to do. You've got to be diligent, ensuring that what is told is truthful on their behalf. When I take on a company to do this, I make sure, because one of that there is no legal action pending against them. I have a legal review on them. We do the deep background check on these guys. We make sure that they don't have any fraud associated with not paying their income taxes, or any kind of pending litigation. All of that stuff. They need to be compliant ethically and legally, right? Cutting corners, operating and hedging your bets, and being non-compliant is a recipe for failure and death of a company, and complete financial loss to all the investors that look into it. So capital raising cannot be done by only the issuer. So this applies to all of the participants, right? The issuers, which is the management and board of directors, the investors, the shareholders, the lawyers, the auditors, the FINRA broker dealers, the investor acquisition firms. These are the marketing firms, any call centers, Boiler Room. You really don't want to be doing that. You want to be having investors express interest and following up with them. Just dialing for dollars is the stuff that gets companies really in trouble for. There's things that you can do. You need to have proper transfer agents. There's things that you can do to solicit to the investors you don't know, because it is a public solicitation, but you do not, want to be doing that. You want to make sure your research providers are legitimate firms, that it's not just, I have a whole folder on scam organizations that would do this stuff and pull it, because unfortunately, the most gullible person out there are the entrepreneurs that think that they can save money or get a scratch and win, build it and they will come kind of a thing, and they don't do the work necessary to make sure they have full disclosure and transparency with their investors that are potential investors. All right. And that means they are ultimately on the hook. These CEOs and CFOs are going to jail. And they could be fined all kinds of stuff personally as well. Plus, the company is going to have to declare Chapter 11 and get bought out. Their assets get bought out, and those investors are SOL. if they had not converted from anybody that's got preferred stock, but if they go public, they're going to be converting to common. So there is no preferred stock anymore. Any VCs that went in there with preferred stock, they're no longer preferred stock. They don't get first position. So it's really, really, really important. And the article is going to be in the show notes. The actual press release from the SEC will be in the show notes. And I want you to encourage you to really, really consider Reg A Plus as a solution for getting out of the malaise of having raised the capital and just sitting there percolating and not reaching your full potential. But please get a good team. If you don't come to me, please, you can go to my website and request a free consultation with me. Just fill out the contact form. You'll get a link where you can request a consultation, set up a free 30-minute. I'll be happy to talk to you about the pros and cons, where you are in your situation, where you need to go. If you're an investor that's looking at a portfolio, you got some number of them that are just sort of sitting there flat, I can tell you what your options are. If it makes sense for them to try to do a Reg A Plus, if they, what it would cost, how we can cover that bill, how that can be worked out, get on a call with you and the company, and we can work this out. We've got some great people in our network that know how to do Reg A Plus, sparkly clean, gold star, whatever a star might be if you're watching me on my video, all of that stuff. So I just really want to encourage you to really consider this as an option, but buyer beware, do it right. And if you, as somebody that's looking at Reg A Plus companies, if you're seeing videos that sound too good to be true, they are. If you see their video, if you see their webinar, if you see marketing collateral that is not backed up with hard data or proof, in their portal, they should have the contracts because you're under non-disclosure at that point. If they've got a contract with Microsoft, it should be in there. Any contracts they have with vendors, joint venture agreements, any of that stuff that's part of their infrastructure, their employee agreements, all of that stuff needs to be in their portal. You may not look at it, you may not, but you need to be able to check your block. And if you've gotten my book, Inside Secrets to Angel Investing, well, then guess what? You got the due diligence checklist to check that stuff off, right? It's in there. It's in the portal. It's the best 20 bucks. It's the best $2,000 you ever got of information for $20. So with that, I'm going to say onwards and upwards, and thank you so much for tuning in. I hope you found this informative, and please share it with those people you think would also find it valuable. Till the next time.